Hey guys, welcome to another party pooper video where I take something that everyone's excited about and I poke a bunch of little holes in it. Today we're talking about weed stocks. Cannabis companies have been in the news a lot in Canada, but they've been making headlines again lately because finally we have a date of legalization. Come October 17th with Bill C-45, you will be able to do recreational marijuana in Canada. And this has a lot of people excited, not only because now you can do marijuana in Canada, but also because investors see this as an opportunity to make money. And this enthusiasm kind of reflects in a lot of stock prices. If you look at the big players in the space, some of their prices have doubled if not tripled over the last few years. And you might be thinking to yourself that now is the time to hop on the bandwagon. Before, these stocks might have been a bit more speculative, but with this big barrier being removed, maybe now's the time to invest. But wouldn't you know it, this enthusiasm about weed is causing a lot of problems with investments. There's a lot of speculation going on in the space. People are buying stocks without doing any in-depth research and kind of taking things at face value. And you can kind of get a taste of this by reading some of the online stock picks. I mean, I was reading one from Pod Network, which is a marijuana business and financial news site, so you think an authority on the matter, and they made a stock recommendation, and the only reason they cited was that the company was opening a dispensary in Brooklyn. I mean, I guess the road to success is opening shop in Brooklyn. Don't get me wrong, this sounds great. Brooklyn's a heavily populated area. But I mean, come on, like, don't you think there's other information the investors need to know for this stock? Like, how about the fact that this company has never made money before? They've never made a profit. Or how about the fact that according to Kush Tourism, probably another authority on the matter, you can't sell smokable marijuana in New York. Like, this is stuff that investors need to know, but, you know, oh, they're opening shop in Brooklyn. I guess that's reason enough to make a stock recommendation. And I truly think that this is but an example of how people are investing in this space, how some people are investing. And to be fair, you can get stock picks like this about any industry. But for marijuana, it's particularly vulnerable because of the growth we've seen for certain stocks. It's a very attractive area when you look at past returns. But that's not a good enough reason to buy the stock now. So today I wanted to take the time to highlight my 3 areas of concern that you should know if you're going to buy a marijuana stock. This isn't a stock buy recommendation or a sell recommendation, but it's just an opportunity to highlight the concerns and the risks that you'll face as an investor in the marijuana space. And throughout this video, I'm going to cite some different numbers and estimates. Obviously, there's a risk that these forecasts might not pan out as expected. And if you actually have some alternative sources of data that conflict what I say, leave them in the comments down below. I'd be happy to discuss them. But using the numbers that I've gathered, you'll start to question kind of the expectations of some of these firms. So let's go to the first area of concern, which is the operational risk of these companies. With the main one being that a lot of these companies aren't making money. A lot of them are losing money every year. For example, if you take the top 4 companies by market capitalization, which are Canopy, Afria, MediRelief, and Aurora, 3 of them are losing money at the operating income level, and 2 of them are losing money overall at the net income level. But the argument here, of course, is that a lot of these companies are startups and they haven't had a chance to realize economies of scale, and in the future they'll make money. And that's a fair point, but it's still a risk worth highlighting. These companies are already in the red, so if something goes wrong with execution of strategy in the future, there's no buffer to kind of help them through that. Regulation is also an area of concern. Obviously, things are going to be legalized in Canada, but things can change at the federal or the provincial level. Not to mention that in the US, marijuana is still illegal at the federal level, so that'll make expansion into the US difficult for any of these Canadian companies. But possibly one of the most overlooked issues in this space is the branding of these companies. While it's still being debated, right now it looks like Health Canada is going to require these companies to sell their product in plain packages with nothing but their logo and a health warning. The issue here is that a lot of these companies have spent tons of money on branding, whether it be partnerships with different musicians and bands, and all of that has been kind of recorded on the balance sheet as an asset. But now we don't know if that's going to translate into revenue. If they can't advertise that this product's endorsed by so-and-so, I don't know if it's going to lead to increased sales. Moving on to the second area of concern, we have to talk about production. This is where, when you start looking at the numbers, it doesn't really add up. It seems every company in this space is growing at net-breaking speeds, and they're trying to get that first mover advantage, being the first one to get market share so that later on their future success is guaranteed. But the issue here is that it almost looks like these companies are paying for capacity as if they're going to be the #1 producer in all of North America. Like, consider this. Stats Canada estimates that 773.3 tons of marijuana was consumed in Canada in 2017. That's recreational and medical. CIBC estimates that Canadian consumption of cannabis will reach 800 tons by 2020. Two of the top 4 Canadian marijuana companies will have a capacity combined of 570 tons annually of production. That means that those 2 companies will be able to produce 71% of Canada's total demand. There's 84 publicly traded marijuana companies in Canada, by the way. Now, you could argue that international sales aren't factored into that, but even if you gave those companies a generous 30% international sales, without getting into the whole argument of why other countries would import marijuana from Canada, they're still making up about 50% of Canada's total demand. And all of this is ignoring the black market for marijuana. 90% of the money spent on marijuana in 2017 was for illegal, non-medical purposes. Now, obviously, there's going to be some transition of the legal demand to legal demand. There's no doubt about it. But to what degree? It's kind of unreasonable to assume that 100% of the people who buy on the black market are going to start buying from legal sources. The black market doesn't have hours of operation. They don't have taxes that they have to deal with. There's a lot more flexibility there. Not to mention that on top of all of this, you'll be able to grow your own marijuana at home. So that just adds to the capacity issue. So to summarize the point, companies seem to be investing way too much money into their capacity, assuming that they'll be the #1 producer in Canada. So they might overproduce. And if you combine that with the fact that these companies can't really brand themselves, or at least will have limited branding, you could see a commoditization of marijuana, where the main point of competition is based on price. I mean, an editor for the BCMI cannabis report suggested that commoditized cannabis will go for $1 to $2 a gram. And right now, that's about how much it's costing a lot of these companies to make a gram of marijuana. But even without that, it's expected that prices are going to fall over time after this initial demand subsides. A November analysis from Canaccord Genuity estimated that average prices, which are currently around $8 per gram and are expected to remain there until 2020 or so, they'll begin to slowly decline thereafter. So there's already a risk expected for the pricing of marijuana. Finally, we'll move on to concern area number 3, which, as you probably guessed, is valuation. Unlike Bitcoin, you can't really pull the argument that this isn't something you can value. Now, with companies that aren't making any money, it's definitely harder to value them because the negative numbers kind of mess things up in the models. But you can look at some different metrics to gauge the size of the value compared to other companies. For example, one you can look at is the price to sales ratio, which is the company's stock price divided by the sales per unit. It's a really rough estimate, but it at least allows you to compare how much you're paying for a dollar of sale compared to other companies. So the average forward-looking price to sales ratio for the FANG stocks, which are Facebook, Apple, Amazon, Netflix, and Google, is around 6.9 times. Those stocks are considered relatively expensive because the S&P TSX PS ratio, which is the Canadian market, is around 3 times. So those stocks are expensive, but arguably in a justifiable manner because they're high growth companies and they're very valuable brands. According to the S&P Global Market Intelligence, the median forward-looking PS ratio for North American companies operating in the cannabis space is 56 times. That means that to trade at the same level as these FANG stocks, these marijuana companies would have to grow their sales by 812% without issuing any more shares and without their share price increasing any more. It just kind of shows how expensive these stocks are. Now, you can argue that these companies have seen much larger sales growth than the FANG stocks in the recent years. Fine. But that growth is not sustainable. It's impossible. You can't always double your sales every year. It's easy when you're a small company, but once you get to a certain size, it's very hard to keep that up. And if that's not enough to convince you, consider this. According to ArcView Market Research, the entire North American marijuana market is expected to be worth $25 billion in 3 years, assuming no other US states move to legalize marijuana between now and then, which is a big assumption, but hear it out. The top 4 Canadian cannabis companies have market caps totaling $19 billion. So 4 Canadian companies have values equal to 76% of the future total North American marijuana market. I mean, some of these companies have market caps larger than Canada's total expected demand. It just doesn't make sense. These firms are simply priced for perfection. They're priced as if they're going to dominate the Canadian market, the US market, and international markets. And It's just unlikely that all these expectations of all these companies are going to be met. It's impossible. Anyway, those are my 3 main areas of concern for marijuana companies, but truthfully, the list goes on. I've shown you that the valuations for these companies are high, arguably at unjustifiable levels. And one could come to the conclusion that the reason for this is people are blindly buying these stocks and speculating without doing any research about if the numbers work out or not. And it's very reminiscent of the tech bubble. It was a new market, a new product, and a lot of uncertainty moving forward about the size of the business. And that's not to say that all these companies will go extinct and disappear. You know, companies survived the tech bubble as well. But at what cost? If you look back at the stock prices, you'll see that companies took years, if not decades, to recover from the fall of 2000. But at the end of the day, if you know all these concerns, these risks, and you still want to invest in weed stocks, all the power to you. Maybe you're even a technical or a day trader and you don't rely on fundamental information to make money. That's fine. But don't be ignorant to these problems. Don't assume that these numbers will work themselves out in the future, because most of the time in investments, they don't. And if you can't tell me the operations, the finances, the risks, the valuations of these companies, then you probably don't have enough information to invest long term. Thanks for watching, guys. If you have any kind of countering points or debatable topics, leave them in the comments down below. I'd be happy to discuss them and to kind of hammer out some of the details. As always, good luck out there, guys, and be safe.